Hello traders, welcome back. Today we are going to discuss our another powerful strategy for the all pairs. So this is based on the sequential SMT, fair value gap, RSI divergence and precision candles. So let me define a little bit about all these things. Sequential SMT is basically a liquidity sweep of the one pair and second correlation pair will not sweep that liquidity. So there is a divergence between two pairs forming on the quarterly based theories. So after that we need to check for the cracks and correlation like FVG, RSI divergence and precision candle. But our first bias should be valid, which is a sequential SMT between two pairs, correlated pairs like gold and silver, like euro and GBP, and like Nasdaq and ES. So like this. So we will plan our entry model based on the FVG. Basic our FVG. Here we are going to discuss the which fair value gap have the most probability setup. Which fair value gap is the most important, or which fair value gap we need to trade, because most of the traders when trade the fair value gap they hit their SLs, okay, and go for a failure. This is not about the failure of fair value gap, this is about the failure of their concepts. So here I will show you that which fair value gap is most important and have high probability setup for entering a trade. So going to the charts for the risk management, for the risk management, it is 1% risk per trade, and our risk to reward ratio will be 1 into 2 or 1 into 3. So for a live example for today trade, we will check as gold was in a bearish SMT from the higher time frame. We already have on the trading view, I already published that one idea and some other videos. So here we will check for M15 divergence between these two pairs. Here you can see that silver took the New York PM session high, but gold didn't. So what our tool did, our tools show that there is a sequential SMT here showing that let me remove this one, and on this candle exactly you can see that gold didn't took the previous quarter high but silver took. So this is a sequential SMT between two quarters. So after this sequential SMT, what we need to look for? We need to look for a fair value gap. A fair value gap after a sequential SMT will be highly probability setup. So going deep into this one, we will check. I already draw these to save the time. So here is our sequential SMT, and after this sequential SMT, here we have a bearish fair value gap, and on the very next candle, on the very next candle, we have an entry, same like with the other pair. This was our sequential SMT candle, and after that here we have a fair value gap. So same on the very next candle we have an entry. So for this fair value gap you can make a precise entry, and our tool is not about the tool, it's about the concept. But what does our tool do? Tool show you, this will show you the exact points where you can buy or sell, or a bullish and bearish scenario will happen. So like this, you see Here was a fair value gap after a sequential SMT. Here is our sell signal, and you can see how this trade goes for the next liquidity level. So you can plan with the 1 into 2, 1 into 3 as per your criteria, and you should be aware of the previous liquidity zones where we have also here we have 1, 2, 3. Three liquidity zones are already there for the sell side liquidity can be grabbed. So let this trade run and enjoy. Please subscribe to the channel, and if you have any questions you can mention in the comments, and stay tuned for the upcoming videos, educational videos regarding trading, and more strategies we will discuss soon. And soon we will reveal that how this market manipulates and how this market take the SLs of the retailers. Thank you.